Now we're going to turn to the refined product world. And as you know, we always like to start out with the average. So here, when we look at the average right now, the current, as we had for this week, the current was 15.184 million barrels a day of demand versus last week 16.268. So we did get that million barrel drop. A lot of that was carried by diesel, which we'll see a reversal next week. Gasoline, again, just staying at that level, which we will see that movement down, and not because we're willing it to. This is not because I'm sitting here saying it's going to and it has to, and I'm going to keep saying it till it's true. It's just we're looking at the full supply chain. We're looking at what were the impacts from the hurricane and what is the demand telling us when we go downstream looking at the consumer. And there's that disconnect that it's just going to be a matter of when does that number get made up? And is it going to be all at once, or is it going to be over the course of 2 weeks? Just given the impacts that we've seen, it's not going to be all at once. It will be over the course of 2 weeks. So it's something where we're at about 9.6 right now. We will see that drop to, let's call it about 9.35. And then we should see another drop to about 9.1. And then we could live there for a week or two before we see a move closer to 8.7 or so. But again, these are going to be things that are going to be they can move around. There's a lot of adjustments. There's a lot of hurricane season left to see some of these impacts. We're starting to get to the end, thankfully, but again, these are going to be some of those things to watch. When you look at that average, you can see that nice steady increase. We're now just over 2017, but remember 2017, you had Harvey, you had some of those impacts. So based on where we are in general, when you look at what happened in 2018, what happened in 2019, and then what happened so far here, when you look at 18 and 19, it was higher, and then you see the drop. So the drop happened a little bit sooner. Instead, we came up and we hit where we were in 2018, and now we fell off of that number. So when you look at the average will get pulled down. It's just how quickly will it get pulled all the way back down, and you can see how quickly it fell in 2019 and 2018. We think it's going to be something similar on a seasonal level. And that's where we keep saying that we're going to come closer to a 14.8, a 14.9 million barrel a day average, just below that 15, just below that 2019 low. But again, there's also a lot of seasonality baked into that, which we still think will come through. So now when we look at distillate here, you can see distillate dropped to 3.14 million barrels. When you look at this against the 5-year average, that's 17.2 million below the 5-year. And when you look at PADD 1 being the biggest driver, still at that 11.3. When you look at imports, so even though imports dropped 223,000 barrels a day, it's still 41,000 barrels above the 5-year average. So when we look at flow, we still have that steady increase of imports, obviously not to that level. But when we look at the drop in production, so production of distillate dropped 624,000 barrels a day. So when you think about 624,000 barrels a day over the course of 7 days, and then you look at where demand was, but then you look at storage, you kind of get an idea of where we sit. So as the additional distillate comes from Europe, comes to Europe from Asia and the Middle East, that's where it's going to be a competition in the Atlantic Basin. Does it veer to the left and go to the U.S., or does it continue on and go to Europe? And there's going to be a matter of where is the best market, where is the best margin. But when you look at just levels and you look at where we sit versus the average, we're below the 29-year average, and typically we don't see a drop until that middle of September. So we do have some space to pick that up. We will see refiners increase their distillate runs. And just remember, when you increase distillate run, you require a heavier crude. And when you look at the loss of Mars based on what's happened offshore, it's going to support that increase in imports and coming from the international market. So we do expect to see more purchases coming through. The headlines coming across right now as we're filming, we have CPC blends getting purchased by the U.S. You were getting additional, some Suezmaxes getting purchased. Again, these are things that are going to continue, and it's going to show up over the next, let's call it 4 to 6 weeks, depending on, is it a resale and closer to the coast? Is it something from origination that's going to take sailing time? Again, just because you purchase it doesn't mean it shows up. It's just a matter of where is it in the cycle. So when we look at the demand overall, we're essentially following that 5-year average. As we were saying, we still think it's going to stay above the 5-year average. Just as we look out over the next past 2 weeks, look forward next 2 weeks, we're going to see that steady increase just because there's still trucking demand. We did have Labor Day where truckers go and enjoy a day off, but just given the amount of shortages we have in the supply chain, they're right back on the road, continuing to move products to stores and to maintain at least some semblance of normalcy within the supply chain, which we know is few and far between. So when we look at the trucking demand data, you can see that dip. The dip is obviously, as we were talking, as you come into Labor Day, that will start to reverse. And then as we go through September and October, you're going to see a very steady increase. Obviously, we're at higher levels, so you're not going to see the same magnitude of increases, but we will see more increases. You will see additional purchasing, because you do have, obviously, if you've already seen it, you have Halloween goods, then you're going to have Thanksgiving, and then obviously Christmas, excuse me, that's going to move stuff through the system for Christmas shopping, holiday shopping. So load availability is still strong. That's going to continue to grind higher. We did get a reversal in rates. Diesel prices did go up. That's going to be supportive of what we're going to see over the next few weeks as well. When we look at rail traffic versus 2020 was up 2.6%. When you look at what is driving that, we're going to continue to see coal being very strong. Unfortunately, the stockpiles are running thin. There's not a lot of new production, but they're going to try to do as much as possible, just given the coal shortfalls, the fact that natural gas is over $5 when you look at the front month. There's going to be a lot of pressure, especially as we're heading into, obviously, the shoulder season. But how much can natural gas build in the shoulder season to see some coal to gas switching, or are we just going to see coal continuing to try to maintain? But how much of those volumes, how much of those stockpiles can be replenished? Grains will remain fairly robust. Obviously, there were impacts to the Gulf of Mexico when you look at where one of the loading centers was for exports. That's going to slow down some of those movements, but again, you're going to see it make up over time. Motor vehicle and parts will remain soft, but ores, metals, again, everything is very strong. When you look at steel, when you look at parts, they're trying to move things through. And then when you look at petroleum and petroleum products, that will stay fairly strong. Not so much, not really more from where it is right now, but you're going to see a lot of that support as things move around, trying to fill some of these gaps. And then intermodal taking that dip. But again, we do see a lot of support for intermodal into the end of the year. And here's why. When you look at just what is sitting, waiting to offload, you can see just the amount that is sitting there versus the previous week, versus the previous year. I mean, we're talking about record volumes that are still sitting. We still have a record amount sitting offshore, waiting to come on shore and then move through the system. This isn't going to stop. You're going to continue to see this is sitting offshore right now. So this is at anchor, or going to be at anchor in the next few days. And it's after it goes there, it goes into a slip, gets offloaded. That load gets essentially spread through, whether it's going on rail, truck, or what have you. Then that boat is reloaded and moved on to the next level. So we're going to continue to see a significant amount of movements in general, and that's going to be something to watch as we go forward, because we want to see where is this going to go, how is this going to go in general. But when you look back through the supply chain, back through China, back into Asia, there's still a lot of that backlog to come through. So we will get one nice little heat wave coming up. It will make things a bit toasty, really across the U.S. And this is just looking against averages. So we will see some strength. This will be supportive of a little additional burn when you look at natural gas on an electricity side. Really before we start to see some of the cooler weather, or I should say, that moderate weather start coming through. That's going to be where you don't really have AC on, you don't really have your heat on yet. So that'll be, again, that pivotal shoulder season, which is where we talk about it. Now, when we look at Gas Buddy, here's where we're seeing some of that slowdown. Over the last 4 weeks, we continue to see some of this drop. When we look according to Gas Buddy, just as we go through the different period, So according to GasBuddy, U.S. weekly gasoline demand fell 2% from the prior week to the lowest level since the week of July 4th. Again, July 4th was because you had that extended period of time. And then when you the Monday slowdown, according to GasBuddy data, Sunday U.S. gasoline demand fell 12.3% from the prior Sunday and was 13.7% below the average of the last 4 Sundays. It was the weakest Sunday since July 4th. Not surprising. That's something where obviously that was peak hurricane, which is going to continue. When we look at Descartes, falls for the 6th straight week. U.S. gasoline demand declined a sixth straight week in the 7-day period ending September 3rd. Again, the EIA to 9.123 million barrels a day. Figures reflect effects of Hurricane Ida, reducing travel to the south, and then that bump up on Friday for the Labor Day weekend. So when you look at where they had demand peak, they had it peaking at 9.6. So again, you're starting to see some of that, GasBuddy's there. When you look at TomTom, when you look at Descartes, again, trying to look at some of these different pieces. Now, when we look at telecommuting, you're seeing some of these increases in general. Again, even though I don't really think that Delta and Mu or whatever, Greek alphabet comes next, you're going to see a huge impact in terms of the way people shop, the way people consume, but you will see some of these adjustments on the on just the telecommuting side. When we look at, some companies are saying, look, stay home through the end of the year. It was supposed to be Labor Day, now it's October. Hey, let's just make it January of next year. So you're starting to see some of these shifts. And here's where we're seeing the Google trends when you look at the trend setting piece. So you're starting to see that increase. You're starting to see some more work from home. Again, we saw something similar last year in 2020. It just happened more as you can see, as we headed through that July period. So on a seasonal level, it's very similar. So it's not too much more than what we saw in 2020, which is why I'm saying I don't think it's a huge shift. It's just something that's moving very similar to what we saw last year. Now, when we look at demand cycles, we had a big bump up in gasoline prices, an increase of almost 4 cents, back to $3.17, almost 18 cents in gasoline. That's something that was, again, you had the disruption, you had the loss of supply. That is going to support some of that pricing. You do have crude prices, obviously, WTI sitting at almost 69, Brent just above 72. So there's a lot of reasons to stay at this level. Now, as we're coming into the winter season, you can change how, or the formula you use, because now we're outside of driving season, which is marked as the end when you look at Labor Day. So it gets a bit cheaper. You can use more benzene. You can use a bit cheaper blending component. So just how you make the gasoline is cheaper, which typically brings some of that discount through. Obviously, with the supply disruptions, it's going to take a little bit longer. And we don't see a huge drop. It's just going to be some semblance of reduction, something closer to, as we go through the next, let's call it 4 weeks, something closer to $3.10. Now, when we look at diesel prices, diesel also had an increase of just over 3 cents. Now it's back to $3.37 on its way higher, especially when you look at heating oil. When you look at heating oil demand starting to pick up, where does that focus? And then you do have rail, you do have ships, you do have trucks. They're all very active right now, and that's going to keep that bid beneath the diesel side. Now, when we look at blending components, you can see that we did get a nice drop. The blending component side, when we look at what that was, it was a drop of, just to give you the full number, was 6.5 million barrels. That's 3 million below the 5-year average. Here you can see we had that nice drop here off that kind of fairly flattish level that we were heading in. You can see it's close to where it was for 2017. Again, trying to tie where was it for Harvey? How did that impact? We will see that increase as well. I'm sorry, you'll see that fall as well. Something closer, and then you'll start to see some of those builds. But just remember, they're going to try to get rid of some of this blending, especially if they don't need it, if there's better places to put it, because some of these blending components can also be used in the petchem side. Typically, it's a much better margin if it goes into the gasoline pool. So this is going to be just that managing production, managing trying to make as much margin as possible. But that will continue to fall, as well as gasoline over the next week. So now when we look at total gasoline demand. Here you can see that instead of it coming back down, and this is looking at the last 15 years, instead of it coming back down to that 15-year average, it just really went sideways with that small bump up. This is when you smooth things out, you typically get this, up and down move. So we do think that you're going to get this drop. You can see here that, as we go into August, the end of August into September, there's that kind of that flattish move. You see that steady decline, and then you reach that new normal, and then you go sideways. Again, that's that seasonality piece, people not driving as much, or at least not as long distances when you consider the end of vacation season. And we still think that will hold, and you'll see that bigger drop as we go through the next few weeks. And now when we compare it over the last 5 years, just to compare closer to apples, here you can see that we're right at the same level that we were at with 2017, 2016, 2019 was higher, 2018 was higher, but we're right at that peak that we had right after Harvey, that we had right after, and then when you look at 2016, we're right there. And then when you look at what comes next, you can see that there's typically that seasonal drop. You typically get that drop down. When you look at 2017, you can see it wasn't quite the same drop. And that was, again, because of Harvey, where you had some of that kind of baked in, and then you had some of that makeup going forward. We think it's going to be a much bigger drop, just again, spanned over the course of 2 weeks as we get some of these movements with just the demand downstream not really supporting that continuous flow from the EIA. Now, if we were sitting here saying, look, Gas Buddy has us up 3% week over week, Descartes has us up, then you could say, okay, well, though the demand side is there, which is going to support additional movement, and right now we just don't have that. So then when we turn to where Google trends, you can see here transit stations picking up a little bit of increase in workplaces, but for the most part, things are starting to move along those seasonal lines, especially parks. Again, when you think about seasonal, that will have a steady move down. Kids are at school. People aren't going there 7 days a week to have something to do with their kids. So here, when we look at retail recreation, steady there, transit coming back up a bit, workplaces, again, it's just very seasonal of what we're seeing. And same can be said here when we look at what happened in 2020 and what is happening right now. You got that same bump July into September, and then as we came into September and October, you had that steady move down. And that's what we're seeing here. So if you remember that move up that we had in the first segment when we looked at Europe, you saw that again, and now you're starting to see some of that normalcy come back down, some of this stuff moving, and we should get much closer to that baseline. Again, not as far down through it, just because I don't think we see the same type of hesitancy with COVID. So, but it's just going to move closer to the baseline as we go through the fall season. Now, when we turn to NGLs and propane, so propane had a build of 820,000 barrels. That's now 17.6 million below the 5-year average. And when you look at it against the last 5 years, we're now well below even the lowest level, which was 2018. And you're starting to see that flatten out a bit. And that's where you're going to see plastic demand. We still have that. We still have a lot of export demand. And especially when you look at LNG pricing, Pakistan, Bangladesh, they've been trying to buy as much distillate as possible to offset the cost of LNG because LNG is just too expensive. So they're looking at, they're looking at LPG, they're looking at high sulfur fuel oil, they're looking at low sulfur fuel oil, they're looking at ultra low sulfur fuel oil, aka diesel. They're trying to find ways to just offset cost. And this is not going to help when you look at just inherent pricing. And as we've talked about before, Russia has a huge drop in their storage levels. Europe is very tight. It's going to be a very tight gas market, especially when you look at LNG increasing pricing. So when you shift to poorer nations, third world nations, they're going to have to find alternatives. And propane is one of them. It's just going to be a matter of, where is that competition and how much of that is going to whittle through and see the more adoption of both high sulfur and low sulfur as well as LPG. So now when we look at the vaccine rate, vaccine rates have pulled back a bit, nothing crazy given where we are. Some of the bigger areas are slowing down just because you're getting to that point of, those that are left don't really want it. So it's going to be a matter of that pushback. So nothing really crazy to see here in terms of changes. When you look at percentages, the U.S. is at 53% fully vaxxed, 9.3% partial. So we're now, once that partial becomes full, we're now at that over 60%. The government just is going to announce, or they did announce, and I missed the official, that you have to get vaccinated if you're a government employee. That will come through. So again, you're going to see some hesitancy that we've seen either be forced in or change jobs. So while India continues to see some steady increases across the board, still slow. Asia still really slow, which is, concerning given if there's another increase, was that going to slow things down? I don't think so, especially when you look at COVID cases now, where mobility is. They're essentially saying, look, we have to start getting back to normal, and we're starting to see that going forward. So now when we turn to jet fuel had a drop of 670,000 barrels. That's just 200,000 below the 5-year average. When you look at demand, it fell, but it fell very much in seasonal line and actually ended higher than that bottom that we saw over the last 5 years. This is one where we think it continues to go through and comes back to that low that we had at the just after August 20th. So not the low that we've seen over the last 4 weeks, but a little bit of that steady move down. And the reason why we're saying that is when we look at departures. So here you can see the U.S. departures are rolling over. Departures in China led the growth, while you can see departures in the U.S. led the decline. Week over week, it was up 1.4%, and you can see that was mostly Asia Pacific driving that, with most of it being China. But globally, the passenger flight schedule for the 11 weeks ahead. So this is again coming to where we're seeing. Declined by 3.7% since last week. So again, you're seeing more of that seasonal slowdown as people aren't flying as much. And then we continue to see that commentary and just people not flying as much on the corporate side. So as vacations come to an end, kids go back to school, not as much corporate travel as we've seen in previous years. That'll continue to keep this fairly muted in general, especially as we see the U.S. and the Americas roll over. And here's where we look at TSA data. So we're back down to the lows. We had this spike up in between 2019. It's all a matter of timing on when was Labor Day, because typically Labor Day, you get that one little spike and then you get that steady move down. We got the spike. You can see where the spike was in 2019. So it's just a matter of that offset. And now we're continuing. And what we've been saying is it's just going to be seasonal decline, seasonal increase, but just at a reduced level versus what 2019 was off that norm. And then when we look at restaurants, so we saw a decent amount of activity as we look at Sunday and Monday, and then you see that pretty steep drop off as we look at September at the 7th, which is the first day that we have after Labor Day. So again, you're going to start to see some of those drop-offs. We still think weekends are going to stay strong, 10% or so. But then when we look at weekdays, we see that dropping off really about 10 to 20%, depending on timing, just because kids are back at school, not as much to do, not as much vacation. So you're going to see some of that drop off, but some of that lost demand on the weekday is going to show up in the weekend, and that'll help offset a bit. But now that we've gone through the U.S. product side, let's turn to the global front and go a bit deeper into what is happening in Asia, what's happening in Europe, the U.S., and how are these shifts, really impacting the longer term view or the longer term movements in crude pricing as we go into the shoulder season.